Unlock GST credit note secrets. Confused by the latest changes to GST credit notes? Scroll through this carousel to understand the amendment to Section 34(2) of the CGST Act and ensure full compliance. Background: Section 34(2) of the CGST Act. Section 34(2) of the CGST Act allows a supplier to issue a credit note to adjust the taxable value or tax payable in case of post-supply discounts, returns of goods, deficiencies in services. The supplier could reduce their output tax liability by issuing a credit note, provided the recipient, buyer, also adjusts their input tax credit, ITC, accordingly. Amendment to the Proviso Section 34(2). The proviso to Section 34(2) has been amended to introduce two new conditions under which the supplier cannot reduce their output tax liability when issuing a credit note. Condition 1. If the recipient has already claimed ITC on the original invoice and has not reversed the corresponding ITC after receiving the credit note. Condition 2. If the tax burden has already been passed on to another party, example, the recipient further charged GST to an end consumer. Practical implications for businesses. Coordination. Suppliers must ensure recipients reverse ITC promptly after credit notes are issued. Track ITC reversals through GST portals or written confirmations. Documentation. Maintain records proving the tax burden was not passed on, example agreements, pricing structures. Compliance. Increased scrutiny on credit notes to prevent misuse. Mismatches in GSTR1, supplier, and GSTR2B, recipient, may trigger notices. Example 1, recipient fails to reverse ITC. Supplier issues an invoice for 1 lakh rupees plus 18,000 rupees GST. Recipient claims 18,000 rupee ITC. Later, supplier issues a credit note for 10,000 rupees, 8,474 rupees taxable value plus 1,526 rupees GST. Recipient does not reverse 1,526 rupee ITC. Impact: supplier cannot reduce output tax liability by 1,526 rupees. A supplier must pay 18,000 rupees GST, original liability, despite issuing the credit note. Example 2, tax burden passed on. Supplier sells goods to a retailer, charging 18,000 rupees GST. Retailer sells goods to consumers, charging 21,600 rupees GST, including their margin. Supplier later issues a credit note for defective goods. Impact: since the retailer already passed the tax burden to consumers, the supplier cannot reduce their output tax liability. How to ensure compliance? Automate tracking. Use software to track credit notes and ITC reversals. Strengthen agreements. Include clauses requiring recipients to reverse ITC promptly. Audit regularly. Review credit notes to ensure adherence to conditions. Stay compliant with GST credit notes.